Hello everyone. Last day we made a crazy, mind-blowing prediction where the gold market behaved exactly the way we expected it to do. Let's see the analysis once again. For now, we there are chances that the market can give a dip, but that doesn't mean that market is going to fall. This is just to get the liquidity below this zone. And I would, when once the market gives a dip, I would definitely be looking at the confirmation that are they again accumulating here? Are they again averaging it here? This, and I am not expecting a further fall from here. And once the market prompts below this, I would be adding my longs to again take the market up. And when will this be invalidating? Only and only when we see another set of sellers, long-term sellers, jumping below this zone, which I am not expecting for now. So for now and long term also, gold is really looking good for a good bull run. And this accumulation is continuing from past 2 weeks after the year low has been broken. So we have to be very careful in this location. Once we get a good test on the lower liquidity zones, we will be good for a long trade. So I'll be very careful on my short trades also. And if we get a good opportunity, that will be a good ride. We will not be scalping it here because this is not the location for scalping, because market has already probed below the accumulation zone from where the market can reverse. So that is not a zone for scalping. I would be targeting 1 to 2% of the instrument to capture. So that is my trade plan for today in the US session, also on Monday. So now you know that we did not expect the market to get sold off. And I mentioned if it gives a dip to below to test the liquidity below this, I am going to add positions. And you can see I've already added the position. And this is one of the smallest account which I'm trading in. I have taken a challenge to grow the account from $180 to $5,000 and $10,000. We are already at $800 within just 2 days. It started with $180. And you can see I have already added the position. You can see the PNL is already running at around $160. Why did we expect the market to have a sharp reversal after taking the liquidity? And we have mentioned many details about the market exhaustion accumulation on the previous day videos. Please go there and check that out. So why we expected the market to not to get sold off was the main reason is the sellers are already exhausted. What does that mean? If the sellers are exhausted, what would market do? So whenever market is going on a trend, on a selling trend, let's take a look from the day's perspective, day candle perspective. Yeah. Here, this is a day candle. So here we can see on March 20th, we had the year low for the 2026, but this was recently broken on the June 26th. But what happened after breaking the year low? As we all know, year lows, month lows, all these are very, very important levels. Because why? Because there, at this location, there will be huge order blocks, huge liquidity. Sellers and buyers both would be interested at this location. So whenever the market reaches to these kind of a highly visible, high important levels where there will be huge liquidity, we need to see what the market is trying to do. If the sellers are confident enough, as you can see, the selling swing has already started. And when it has started breaking the year low, what do we expect? If the sellers are confident enough, we expect the market to get sold off, to continue the selling off, right? Because new set of sellers would jump in. But what happened? Market started to hold on to these levels. Hold on to these levels. Hold on to these levels means what? Buyers are still interested in this level. Even though the year low is broken, buyers are not giving up. And we see that market has been holding up for the past entire month. Does that only conveys that the sellers are not confident and it is just holding on there for a while before the market decides? That we have to figure out by checking, is the accumulation going on? Or is it just holding on? Or is this just a weaker buyers trying to hold on? But we clearly figured that out. This is long-term accumulation which is going on. That we figured out in the past videos. Please go there and check that out. It's very important. So one of the easiest way which we figured out when the market was getting sold out was using an indicator called as volume delta, which you can easily find out from trading view. What does it volume delta indicator does? It clearly specifies and defines when for a specified time frame, what is the buyer volume, what is the seller volume. It clearly gives an idea. But if you use a volume indicator, it is not going to give a clear separation between buying volume and selling volume. All it gives is that 5 minutes, how much of a volume has come in. But using the volume indicator, we can clearly understand whose volume has come, whether it's buyer or is it seller. Okay, so let's take a look. So here when the market has fallen, when the market has broken the year low and it has been halting on this range for quite some time, what we were seeing the accumulation I mentioned. So how did we figure out? We just take a look at that buyer volume delta. You can see right here, huge green candles are popping out. Here also you can see. So these are all accumulation levels. Here, market buyers, long-term buyers are very much interested. And whenever the market is coming down in this level, what we are seeing? We are seeing increase. See from here to here, how the spike of volume is increasing. Volume is continuously increasing whenever the market has been trying to test the year low again. What does that mean? Accumulation is going on. Mark, and we are not seeing any dips that sustaining. Even though the sellers are trying, you can see the selling volume is also coming in the lower lows, right? In the year low, lower regions. But finally, what is happening? The sellers are getting exhausted. That's why we mentioned here that even if the market gives a dip, I am not going to sell. This will be my opportunity to add it to a long-term position. That's why I added up the positions and I'm holding on to see the positional reversal. And now the market is trying to probe above 4,100 and everything goes fine without any major news break or any other changes that happens in the global situation. Market, I am expecting the market to probe to 4,200 at least. And the when will this be invalidated? This will be invalidated only and only if the market sustains here. Please listen. When the market has to sustain below the previous Friday low, which is Friday, July 17th. Only and only then I will be thinking about short. That also, I will take a look at the price action, whether the good seller volume is punching or is the accumulated participant liquidating little of their position for another sell off. Until unless I see this, I would be looking only and only for longs. So, what is the next opportunity for the Monday and the upcoming week? My take on the trade plan would be if the market gives a retracement, if the market gives a retracement, that would be the best opportunity to add on to my currently running on longs. You can see the my longs are already running with around 300 pips profit. So I will be holding, I'll be adding or averaging onto the longs, and my target would be first target would be 4,080, 4,100 levels, and then to 4,200 levels. That is my target. I am not interested in shorts for the upcoming session. I hope you learned a little bit. And in this current channel, I will be focusing more on price action, order flow, market profile, and every day I'm doing gold analysis. Thank you so much. We'll see you in the next video.